The finance minister has stepped down now from his post. He does retain the post as a deputy prime minister. Robert Munuku, he's a lawyer and cabinet minister, now takes over as acting finance minister. What are your thoughts on the latest developments?
Good morning, Samantha. Thanks for having me on. Well, I think it's been a good move for those government officials to actually step down, because it's something which was required of them constitutionally. And I think the public has received it well and positively. And looking on, I guess what's more important is a question of maybe competence and maybe whether those who take on are capable of steering the ministries to where they're meant to be. But as for the stepping aside, I guess it's a good move. It shows there's accountability, and it shows people are taking responsibility for their actions.
The short-term focus is, of course, the budget, which needs to be prepared by March the 21st. Are there any concerns that this might be delayed?
Yes, definitely. And that aside, I think there are so many objectives the government has on its yearly plan. We have a number of things scheduled to be done this year. We have the elections. We still have the interim electoral boundaries committee trying to finalize the issue of boundaries. There's a lot of activity that the government needs funding for. And with this, I guess the government is under high pressure to come up with a sound plan to have a budget out when it's meant to be ready.
In the meantime, though, just looking at the shilling, it has been on a one-way strengthening streak this week. It dipped below the 85-point level. What do you see at this point in time as boosting the local unit?
Well, I guess for the most part, it's because of the proper policy we've been having from the Monetary Policy Committee on currency stability. They have done a good job so far in the past 2 months or so. And I think that has kind of eased the inflation for one, and on the other hand, it's controlled cash supply into the economy. I think that has played a key role. And another thing we must mention is maybe the lower demand for the dollar internationally has played to the favor of the local currency.
Yeah, as you say, we can't take our eye off on what's taking place with the dollar, and that decision by the Federal Reserve was negative for the dollar across the board. Let's look at remittances inflows and the impact that has had on the currency. We've had the latest data showing that in the year to November 2011, we saw $72.6 million flowing into the country from remittances. That was at $20 million up versus the previous period. What's been driving this growth?
Well, if you look at the time that happened, I think it's mainly because of the positive prospects. Investors saw Kenya as being a good hub for investment. So there was a lot of cash inflow. Foreign direct investment, we had a lot of goodwill. And looking also at the time we moved from in 2010, when we had passed the constitution, there was a lot of positive prospects for the country. So I guess it was more of a question of seeing Kenya as a potential hub for investment, which will bring returns that are promising.
Government has also been looking to attract the diaspora with regards to paper issuances. Has that been successful, and has that been one of the key drivers of the growth?
Well, not really as such. I guess also it comes back to the issue of policy. And if looking at the currency stability, looking at how the government has decided to act on for example, the central bank rate, it has tightened liquidity. And people are actually having more access to credit. And more access to credit means they have more access to investment opportunities, both locally and abroad. And I think that has been more of an integral factor when considering the amount of progress we would be making.
We had the tea sector numbers for 2011 coming through this week and showing that the tea sector netted a record 109 billion shillings in 2011. Going forward, though, what is your outlook with regards to production, with regards to the impact that the stronger shilling is going to have on earnings, particularly in light of the fact that we're looking at a 17% drop in outlook quarter on quarter for the first quarter of 2012?
If things remain as they are, we expect that to go down. But if we remember correctly, last year we had a spell where the shilling was really weak, and for such an industry, an exporting industry, the tea exporting industry, that plays into its favor because you get a lot of foreign currency denominated revenues, which at the time were much higher because of the weak shilling. All the same, this year I think production is actually expected to be higher than last year, so that may in effect make up for the stronger shilling when it comes to the foreign currency revenues.
So positive outlook there, Robert. Before I let you go, do you have a favorite stock in the sector then?
Well, right now I'm looking at the services sector. I would have to pick the tourism stock, TPS Arena, as one of the discounted stocks I would be going for right now. I'm also looking at Kenya Airways at 20 shillings and 25 cents as a really good buy right now. Perhaps maybe if we get more information on their rights issue, it would help one come up with a better investment profile. But those two are my picks, Kenya Airways and TPS.